planned to do heavy artillery strikes against Iran that was going to get priced into the market. Stocks kind of sold off here on Thursday and stayed low on Friday. Apparently, those did not happen. They paused and we're going to talk. The yo-yo game of the Iran war continues, but nonetheless, markets, you can see over here on the right, are gapping up on this news. The futures market, which opens up Sunday evening and runs overnight, leading up to the Monday morning open, which starts in 30 minutes. S&P's up 1%, NASDAQ's up 1.5%, Russell, Dow, everything up pre-market. In fact, gold, silver, commodities up as well. Everything but crypto, which cannot just catch a bid this year, is up pre-market. So we're going to open up higher into the morning open. So we're going to be looking for trades that we can buy, get long into the open, and see if we can't make a little bit of money here this morning. Hope you guys all had a wonderful weekend. Eddie, good morning to you as well, sir. Jack in the Box updates. Yeah, Jack in the Box. I did a video on this. Pushing higher. I began building a position back in. If you missed my video on Jack in the Box, I put a stop loss in, was at a down. I stopped out, missed my perfect entry here at 13.5, started buying back here in the 14s, had an order to add in more here. Have not yet gotten filled at. It's gapping up a little bit this morning along with everything else. So up a little bit here. Another one I get asked about all the time is Outlook. So this is a stock we bought. I'm sorry, I shouldn't say that. I did a video on recommending as a possible buy here. This is a small company that got an FDA second look, had a perfect little high tight flag happening here. Stock made a tremendous move higher. From that video, it shot up 135% in just 13 days, began drifting. And on Friday, that FDA approval came in. It was a wild day Friday with this stock. Here's the action. So the FDA approval came in. It went from $1.40 to $1.75, down to $1.10, back to $1.70, back to $1. Just really, really wild as traders tried to read into that FDA approval, go through the details. So whippy all over the place. Thought we might be higher after these news, but it appears we're kind of settling in at about $1.50 on Outlook. So if you were long from that video when we first talked about it, you're up 70, 80% in the last month on this. As I told you guys, I recommend selling the bulk when you get a double out of here. So you shouldn't have a ton of the position left, but if you do, the news is now out. So I would probably consider getting out of the bulk of this thing now, unless you really just want to hold it for a very long move. You bought it at $1.38. You were very, very late to this party. I would cash out for the small win. The opportunity was before the news. So this is when the stock got the second look from the FDA. Basically, the FDA agreed to reevaluate their data. It then pushed for another double from there, but now it's kind of fizzled out. You're talking about a stock that was 20 cents 2 months ago. Now it's $1.40. It's a 600% move. Okay, so if you're long from $1.30, $1.40, I'd get out of this thing personally. That's me. At least sell the bulk of it. Okay. Good job, George Builder, fellow Alabama guy. Love it, man. You got in at 96 cents. You're up 50% or so, right? I mean, nothing to shake a stick at right there. 50% on a stock in a couple of months is not too bad. All right. So we're going to dive into everything today. Now, if you're here for the first time, I'm going to go through some of the basics this morning, covering what to look for, what to look out for, what areas are showing strength, and see if we can't find some stocks to buy this morning. The S&P really setting up in what appears to be a pretty clean breakout pattern. And if you're not familiar, one of our go-to bread and butter setups is this shallowing base breakout, where you get a stock or an index or a commodity, anything that makes a big move higher. Okay, this is showing you there's big demand for that stock. And if you're new, you'll hear me use the words supply and demand over and over and over again, because guess what? That's what moves stocks. Don't overcomplicate this, folks. So big demand driving it higher. It then needs to digest that move. That supply needs to kind of work its way out. And you get this kind of shallowing pattern as that happens. Okay. Because when you're talking about supply and demand, it's just that's all there is. It's no different than the car market or the housing market or any other rare exotics. If there's more buying than selling, it's going to go up. There's more selling and buying going down, right? There's more people trying to buy than trying to sell, and vice versa. That's what's going to move it, okay? And we can see all of that on a chart without any fancy indicators, without any inside information. We can see what's happening. Over here in April and May, that was big demand. Many more people trying to buy than sell. And then it consolidates, right? And the smart money is kind of building their positions. They're taking advantage of these little dips. They're buying in, and that shallowing is where the supply is being sucked out. The people that are over leveraged are getting shaken out. People who are bored are getting shaken out. Stops are getting run, especially on some of the tech stocks that rolled over. But that usually sets up the next move higher. And the strongest buy point is when you get these breakouts through here. Okay. And if you go back and look at some of our big wins, almost all of them came from these types of moves. In fact, if you want to look at like gold, it's been a pretty nasty year for gold, but the big run that started a couple of years ago was from this exact same pattern, right? If you look over here at the 2024 breakout, let's just go back in time a little bit. You'll see that same pattern that formed here on the chart. So you got big demand stepping in. It then comes in and shallows and compresses and breaks out. And as it does, if you buy on that breakout, that's when you have the best chance of getting these big, fast runs. That's where the energy is being released, kind of like a coiled spring as it shoots higher. And then you'll see there, it formed another pattern right off of that and broke out again. So if we look forward, look what it did. It's the exact same thing in here. Made a big, strong move higher, compresses, consolidates, shallows up, tightens, breaks out for another run. And you'll see this over and over again, right? You'll see it happen here. Excuse me. Put it in log scale. It came in and consolidated here and broke out. It came in and consolidated here. This is what stocks, commodities, indexes do until the party is eventually over. But they take this stair-stepping pattern, right? You get the run, the consolidation, a run, a consolidation. This is what a good trend looks like. They don't just go straight up. They run, consolidate. So where you want to buy, if you can, is here when it breaks out. Here, right? Those are your buy points. That's what we're looking for. Because if you're holding in these periods, well, that's frustrating. It's going nowhere. These are no fun, right? It just bounces around and chops and consolidates and frustrates you. The periods we want to own are this move. We want to own in here and in here and in here, right? So, how do we know what to look for? Well, one of the easiest ways to stay in sync with the market is to go where the money is flowing, right? So, the big money on Wall Street, the hedge funds, the endowments, the pensions, they're investing in big themes. They all bought semiconductors in 23 and 24. That's why Nvidia and all these stocks made huge moves. They all bought nuclear in 25. They all bought memory at the start of this year. They were all buying gold in 2024 and 2025. And right now they're all buying cybersecurity and biotechs and these names. So when they're all buying a certain area, that demand we talked about is all going to certain stocks and certain groups. Those stocks are going to rise faster than the others. And that's your tailwind, okay? That's where the entire sector is leading the market. And so if you can just hunt right there, right? Instead of trying to find a needle in the haystack, go, well, all the semiconductor stocks are going up. All the cybersecurity stocks are going up. If you then look there for your best candidates, you are fishing from a stocked pond, right? So what I try to do is get the odds in my favor as best I can. I need a bull market, right? That obviously is going to make it a lot easier. I want to go where the money is flowing. I want to go into the sectors and the groups of stocks that are going up the most, that have the most momentum, the most buying, the most demand. And then I want to find the stocks, ideally, where I can get a really good buy point at. And those buy points, if you take something, we'll just continue on this chart of gold, for example, because that was a really strong trend over here, are going to be one of two places: breakouts and pullbacks. Okay. The breakouts are here and here and here, right? Those are the breakouts. The pullbacks are the dips to key areas, either a moving average, like this is the 50-day, right in here, or maybe a previous breakout area, like in here. Okay. And that, at the end of the day, is as hard as you have to make it. Leading stocks, leading groups, good buy points, either breaking out from consolidation or pulling back to an area stock is likely to bounce from. Okay. So let's look at some of those leading areas. For example, cybersecurity is one of them. Big area here, big here, leading area here. It's been a top performer, right? If you're not familiar, this is our industry strength gauge. It is free for all of our Black Ops members. So if you're not already, do yourself a favor right now. Click the link in the description or just go to tradewithross.com. I've even made a little QR code over there in the bottom right corner you can click on. It's $5 for the entire year. You'll get this indicator for life. You'll get these Monday sessions for a year. You'll get another Thursday session with my analyst for an hour every year over Zoom. You'll get my weekly newsletter delivered to your inbox. You'll get some bonus report, tons of stuff. It's just $5. There are no strings. So go to that link. If you are a member and have not gotten, there's a link inside the members area, but if you haven't gotten it, I'm going to post it up here in the chat. This is the page you're going to go to, and all you've got to do is come in, put the email address you signed up with, okay, and your TradingView username. You can find that by just going to your TradingView, clicking your little icon. Mine is Ross Givens, whatever the heck yours is. Put it in there and hit submit, and then we will authorize you for this industry strength indicator, okay? And then all you have to do is come in, hit indicators, and type in TA industry strength. Whoops. And add that to your chart. You can set it to the top 5, the top 8, the top 10. I've got a couple of them on here so I can see all these different periods. But here's the link. I'm going to have somebody type this in there. Derek, if you would put this in the YouTube chat, that message right there. But if you are a member, click on that. If you're not, go to Trade with Ross, sign up. It's $5. If you don't get a million times your value out of it, shoot me an email. I'll put $5 in an envelope and mail it to your house, okay? The Thursday sessions, yes, are useful for anyone. We call those our war room sessions. I try to do more teaching in this session. That one just, one of our analysts kind of fires off some of our picks and looks at them a little closer, but be sure to get signed up for that, okay? So let's look at cybersecurity. All right, I built a little list here of cybersecurity stocks. Anybody can do this. Just Google cybersecurity ETF, find the stocks, add them in. And we want to find some that are at good buy points. Now, RPD is a little extended, okay? It went from 6.5 to 13.5, excuse me. This thing doubled in like a month. That's a bit extended. This is not a super clean pattern off the low, but you can see the consolidation, right? You can see in here, we got a little ahead of ourselves, pulled back, and then ran. So where would I want to buy this? Well, the only place I'd really like to buy, and unless we get a new setup in here, would be a pullback to either this 50-day moving average or kind of this past breakout area. So if I get a pullback down here to the $7.5, $8, I'd look at buying it. Do I want to buy it now? No. And this is one of the hardest things, okay? We know what's leading. We know the stocks that are running. We don't want to chase them. Our goal is to get odds on our money, as Mark Minervini would say, right? We want to find a place we can risk 5 or 8 or 10% and have a realistic chance of making 40 or 50 or 60. That's the name of the game, okay? That's all. I mean, look, if you're a day trader, you're risking 2% to try to make 7 or 8. If you're Warren Buffett, you're risking 50% to try to make 3 or 400. I am what's called a swing trader. I'm looking for stocks I can hold usually somewhere in that kind of 2 to 8 week range. Okay. And my goal is to risk sub 10%, so 7, 8, 10%, to try to find these 30 and 40 and 50% movers. So that involves finding the stocks in the leading groups. That involves finding stocks with a decent ADR. If you look up here in the top right, see that ADR percentage, 9% is a free indicator. You put it on TradingView, any platform should have it. It tells you that stands for average daily range. Okay, how much does this stock move on average, low to high, in a given day? And while I don't want the ones that are 50% or something crazy, I want stocks that can move, right? If I'm looking at Walmart, well, it moves 2% on average a day from low to high. So let's say it is a great week. Maybe I can make 7 or 8% on this. La-di-da, right? Compare that to RBD, which was 9% on average. You could see 30% in a week pretty easily. Okay. So I generally look for like minimum like 5% if I can find it, right? I want the leading names. Is this one? No. It's in a leading group or in a good market. Is the stock leading? No, it's a dog. I don't want it. Sentinel. I talked about this one, I think, in a recent video, or maybe it was my weekly update. Notice how this one, and I'm kind of Monday morning quarterbacking here, and this one's not anywhere near perfect, but see how we had a little bit of consolidation. It breaks out, right? That would have been a good buy point. Turn the moving averages off. See, then it pulls back right to that breakout area. Would have been a nice place to add in if you missed the first buy. Okay. Booz Allen had some kind of big day, probably an earnings related situation. Let's see. Nope, something else happened to this stock. Okay, big day on Friday. We'll see how that gap happens. Now, we looked at this one last week as potential buy. It didn't hit. Okay, but this is what we were looking at, and we set this trade up. I canceled it because it didn't fire. But see how we had the big down move? It then comes in, starts to consolidate. It's all right, well, if we come up in here and break, I'll buy here. Now, it didn't break out, which is fine. I didn't buy it. I'm trying to be very, very picky. Fortinet, big mover. This one's, you could probably buy this here. Why? Well, there was the big move. Okay. Began to kind of consolidate in here, tighten up nicely, started to break out, and there's our retest. So if you bought Fortinet here, 154, 152, whatever it's going to open up at, I'd put my stop loss about here. I'd risk like 7%. Because if this stock's going to continue running, if this group's going to continue leading, the market's going to keep rallying, this one should continue with it. If it doesn't, if it rolls over and gets down below the 50-day moving average, I don't want it anymore. I'll risk 7% to be in a stock that can go 40, 50% in a month, right? Setting up all right. Let's see. Zscaler, still early. Palo Alto. Yeah, this is when we talked about potentially buying on the dip here. Datadog. So Datadog's early, but it looks like if it can continue, it could be a decent buy, right? Do you see the early signs of this consolidation? Or you could buy the pullback in here. Unfortunately, it's gapping up. Would have been a nice little buy here at 240. It's setting a gap at 253. We'll see what it does at the open. Gen Digital, very similar to the others. Or the one we just looked at, excuse me. So see how it made its big move. It's starting to consolidate. Look at the pullbacks right there, that 50-day moving average. I'll turn off the others. Look at how the 50-day moving average is supporting this stock. Everybody see that? See how in the trend down, it's pretty much holding beneath it. And the trend up, it's holding above it. Everybody see that? That's what a good trending stock is going to do. It's not guaranteed. But if it is, in fact, a good stock being bought by big institutions, it's going to be held by that. Now, who can tell me Why the stock went from 18 to 28 and then stopped at 28. Who can tell me there? Remember to think about supply and demand. This is really important because it's going to help you with your targets to know where to sell and get out of some or when the stock could stall soon. Sorry. Who can tell me why the stock stopped at 28? Some of my guys have been here for a while, know the answer. Resistance, privy, yeah. Why do we stop in there? Twice, three times. Well, think about supply and demand. Okay. Supply is where people want to sell, demand is people wanting to buy. Think about the last place this thing stalled. Overhead supply. Shauna nailed it. ADP. Yes. Look at all this action in here. It's been October, November, December, and the first half of January, holding up here between $26 and $28 a share. So all those people who thought they were buying the dip saw the thing dip much more. Right? And so what do you do when you buy a stock at 26, it falls to 18, and it finally comes back to 26? You go, thank God, I'll take a break even. I'm out. Whew, thought I was going to lose my shirt. All these people over here who've been massively underwater are pent up supply. They are itching for a chance to get out at that price. So when they do, notice how this is exactly where the stock stalls. Dips back, stalls again, right? And what is this doing? It's setting up the next move higher. You have to get through that supply. Listen, if I was standing there with a sell order for 10 million shares of GEN at 28 bucks, before that stock can go to 28.01, people need to buy all 10 million of my shares. It's just how it works, right? It's an auction. I have 10 million shares. It has to get through that supply. And so that's obviously an exaggeration of one person, but it's a bunch of sell orders up in here. And so what has to happen now is we got to work through that supply. And what you're probably going to see if this trend continues is it will slowly work through that supply like it has been since the 1st of June. Then selling or bouncing, work through the supply. And then once it gets through, once it breaks through this $28 area, that's your sign through the supply. And that's when the stock can now release its energy and move higher. And that's going to be your highest probability place to buy this stock, right? And if you want to kind of get cute and work your way into it, okay, well, try to buy off these dips of the moving average. And these are so far set up perfect. And you could buy here. If you want to just, be patient and work yourself through, you could buy it, risk 5%, and build into that position. Okay. So it's set to buy, it's set to open at 26.04. Now the spread pre-market is pretty high. So I'm just going to put like a buy limit and call it 26. See if we can get some. Okay. And I just want to put a stop down in here. Like, see where I'm hovering my mouse? See how it stalled here at 25 and bounced, stalled here at 25 and bounced. I'll give it a little bit of room just in case, but like I don't need to give it much. So call it 24.60. Okay, so I'd be risking a whopping $1.40, which is what, 5%, 6%? So we'll see if we can get some shares of GEN. Now, am I expecting this thing to go up 80% this week? No, I think it's probably going to be slow. I mean, it's probably going to pull up in here and do something like this and then continue to run. But I can get in with a very small 5.5% risk. Okay. In a leading stock, in a leading group, in a strong bull market. And that's all we're doing, is trying to put the odds in our favor. Okta. Now, where would I love to buy Okta? I mean, if I just got my buy point, I'd love for it to come in about here. Big set of demand in here, heavy buying. 50-day moving average, right? If I can get a buy at like 120, 125, I think it'd be a great buy in Okta. This is a massively leading stock. It has a relative strength rating of 96 out of 100. It's very, very strong. It's in a leading group. These are the kind of names I want. Cloudflare, 50-day doing its job, but a little bit whippy for me. CrowdStrike. Everything is technically perfect. Look at this. Look at how well this formed. Okay. It's trending lower. It puts in a consolidation. Nice little shallowing and some dips, but right back up. Nice little handle. Breaks out. Big run. Comes in. Shallows out again. Breaks out. Retest. Retest. This is do or die time. It should bounce from here. This move is probably over. The 50-day moving average, that dashed line, should support this stock. So if I bought it here, I risk 6, 7%. See if this thing puts into the 220s, 230s. So again, we can get away with not risking a lot of money. We'll try this one as well. Probably put it down. Call it 175. Again, less than 6% risk on this. Right? Now, these aren't guaranteed to work. Maybe the move in semiconductor, I'm sorry, maybe the move in cyber's over. Maybe we change our minds and drop 100 bombs in Iran and the market sells off. There's no guarantees here, but we're just trying to put the odds in our favor. Now, I was looking at LDOS. It's been a big laggard in the cybersecurity space. But notice how here off the lows, we got a really clean shallowing consolidation. Okay. Broke out here on Friday. It finished the day weak. Okay. See how it broke, ran from 110 to 115, and then closed down here at the lows. That's not ideal. A good breakout should close near the high of that candle. Because where it finishes the day or finishes the week is where the game settled. Okay. If it is in fact the start of a move, it should finish strong. It should have closed at 115, 116. The fact it's a little weak is not ideal. So it's kind of one tick mark against it. I want to let this thing trade a little bit in the morning. But if you bought it, if it starts to run, we'll use the low of the day and see if this thing can go. Rubric. I mean, there's your buy point. If you want to take a stab at Rubric, right here, pull back to the consolidation area for the 50-day moving average. Buy it here. I'd probably want to risk, 7 or so percent, 68.5. See if we get a bounce higher. The Jersey Mike's IPO. Funny you say that, Susan. I got alerted to that from Fidelity. I used to love Jersey Mike's. I'm not a big fan of buying IPOs. 95% of them do this. They open, a little pop, and then they get murdered over the next couple of months, and they fizzle around and they start the real move. So the structure of IPOs today is really working against the average investor because instead of a little garage startup going public to try to raise the money, they've already got venture capital. They already got private equity. They've ramped the sales as high as they can. They're riddled with debt, and they're trying to dump it on the market at the highest price they can so the fat cats can cash out. So very, very seldom does an IPO hit the market now where you get any kind of an edge or even a fair price. Most IPOs hit the market at usually at least double what they should be valued at. Wow, big correction in Tenable. See, I like that it's pulled back to the break area of the 50, but that's kind of a deep. Normally in a good trending stock, you shouldn't see more than like maybe a 20, maybe 25% dip. That's kind of on the edge there. So if I bought this one, I wouldn't want to give it honestly more than the low of Friday, a couple of percent. Whoops. Yeah, let's wait on that one. Let me see what our other two orders have done here. Oh, it's kind of running away from us. It's okay. We got plenty of opportunities. I think the big buy on Gen is going to be if this thing can set up, and it's probably going to take a few days. But the really good buy on GEN is going to be something like this. Yeah, it's kind of running away from us here. Whoop, got CrowdStrike. All right, so we'll see what this one can do. All right, a lot of you guys mentioned a lot of stocks. Vera, yeah, Vera's really kind of crapping the bed here. Seems to be a buy the rumor, sell the news. Um, could do well. Price action just looks pretty weak over uh, the last several trading sessions. The last probably week, 2 weeks. Somebody mentioned Riot. Yeah, Riot had a perfect pullback buy. See it over in here. See, you got the multi-month consolidation breaks out. Notice exactly where it bounced from. Okay. And most people, only you can answer this, are going to be more prone to pullback buys or to breakouts. I prefer breakouts. I just like knowing if I'm right immediately. I like to buy a stock, see it run 5, 6, 7, 8% the first day, see nothing but green, know really quickly if I'm right or wrong. Others just have a hang up in their head. They just can't buy stocks at their highs. They just don't like it. Something about it makes them weird. They look at a chart and they just want to buy low in the chart. So for you guys, look for these pullbacks and just stick to a 10 or so percent risk profile. All right, we covered a couple of these already this morning, but I'll go back and revisit them. Jack in a Box, yeah, here is running. If you missed my update video, um, I bought this stock with our first video over in here. It shot higher. I put a stop loss here at my break even when I was on vacation. It tagged me out. I began building my position back. Bought some at 14, trying to buy some here at 13. Didn't quite get it. It's a much smaller position than I had before. I think I had 3 or 4,000 shares. But I still believe in this long term. Here's the case on Jack. Okay. One, it's been absolutely murdered. Okay. It's a stock that was $100. It got all the way down to 8 or 9. We have a really clean shallowing base off the lows. We see it very clear that there's consolidation, that they're absorbing supply. There was our breakout. In addition, this stock has massively high short interest, meaning 35 to 40% of the total float is held short. And so what can happen when the high short interest is you can get a short squeeze, meaning it starts rising higher. The shorts are freaking out. They're getting underwater. They want to get out. And to get out, they have to buy the stock back. Because when we place a trade, we buy to get in, right? And we sell when we want out. But if you're short a stock, you sell to get in. You're selling hoping to buy it back lower. And to get out, you execute a buy. And that's what triggers the squeeze. Is the stock starts rising. They're freaking out. They're like, forget it. I give up. They cut their position and they have to buy to get out. So they're buying into a stock that's already rising, which throws even more buying pressure, fuel on the fire, and the thing just rips higher. So that's the potential we have here in the Jack in the Box. A fairly low float stock, doesn't see a ton of volume. It is a turnaround story. They've got around $1 billion in debt, but they're trading at 0.2 times sales. So very, very cheap compared to all other fast food stocks. They got a new CEO, the guy that helped turn around Taco Bell. They restructured the debt, pushing it out to 2029 so you don't have insolvency risk. So it is a risk. But what you're betting on is if this stock can just maintain, if the same store sales just stop declining, which they have, and if sales and profits tick up in any way, 3, 4, 5%, the shorts are going to bail. That's going to force them to buy to get out. And so you're getting a stock that if they turn it around and figure out the debt and come back to being a decent operation, is easily a 20 or 30 or $40 stock. But it's being priced at a very low multiple because there's risk around it. And so it is a trade, right? We are taking a risk on the thing. But we have a technical buy point. We have a high short interest that could cause a squeeze. We have a decent turnaround underway. That's the case on Jack, okay? And it's up another 10% or so today. It's a mover, right? So it goes 10%. Look, it moves 10% every day. That's the ADR. So this is not an abnormal day. But the shorts came in, they sold it back. If we can break them and get above 18, we could see something special happen here with Jack. But, don't risk the farm, right? It gets down here under 13, be careful. Quantum is getting a tailwind today. Let's take a look at some of the quantum stocks. Well, QTU, what's the ETF? It's QTUM. Yeah, up 2%, pretty flat. Now, does everybody understand the 4 stages of stock cycle? If not, I won't waste time going through it, but do yourself a favor and screenshot this, okay? These are the 4 stages of the stock cycle. And you can Google this or look it up later. I've got videos on it on my channel. It's a weekly chart of Roku. And these are the stages stocks tend to go through based on whether they're being bought in the markup phase, institutions are getting out, or the markdowns. Your best buying opportunities are going to be stocks in stage 4, either coming out of a stage 1, so it gets down here, repeats stage 1, starts to break out, or buy points within stage 2. So it runs, it consolidates, it runs, it consolidates, runs, consolidates, right? That's going to be your best buying opportunities in this stock, in these stocks. And so it's just helpful to look at a weekly chart, see where a stock lies in that cycle, see if it's being actively bought by institutions or it's in a markdown, they're all getting out. You don't want to try to buy in stage 4. It's like trying to catch a falling knife. Excuse me. I'm so sorry. All right, we'll finish these last couple of cybersecurity, see if we have any buys in here. ACAM, I think, is early. A10's extended. Parsons may be getting ready. Probably buy Tenable here. Stop at the low of Friday. 8% risk. If it's going to bounce, it should do it here. Off this 50-day. In that supply level where buyers are stepping in. Somebody mentioned YOU. I think this one looks good. I think it's early. But yeah, you got months of consolidation up in here. See it coming to the big dip, and then they bought it. We want to see it tight, little move up in here. We want to see active buyers, big demand, absorbing supply, then a breakout. That's where you want to buy this stock. Buying it in here, you're kind of still in the chop zone. It's probably not going to do much for a couple of weeks. Whoops. Okay. All right. So the index is all up nicely this morning. Got a strong win behind us. Let's see. CrowdStrike, are we popping yet? Nah, not really, sitting right around there we were. That's okay. On a pullback, that's what's tough about pullbacks. It may not bounce instantly. I could chop around here for a little bit. I'm going to give us a little bit more room. Bring our stop down to like 7%. All right, let's see. ADPT, y'all are firing off some stocks. Love it. Yes. So, what is this? It's a biotech company. How's biotech doing? Well, it's consolidated this month, but leading over 2 months, one of the top over 3 months, one of the big names over 6 and 9 and 12 months. So, it's absolutely a leading sector. You can see from the trend, the stock is ripping higher. Okay. And what are we seeing here? A nice little consolidation up on these highs. And you can either kind of draw it like I do with the kind of shallowing. You could say, well, it's kind of a wedge, right? It's all the same thing. We just, when a stock is being consolidated, when they're sucking up the supply, when I say sucking up the supply, I mean like they're buying up the shares, buying up the shares, buying up the shares, right? There was, and I'm just going to make up very small numbers, but let's say there was 1,000 shares of ADP floating around. It pulls back, they bought a bunch of them up. Now there's 800 shares. They run some stops, buy them up. Now there's 600 shares, right? Now there's 300 shares. That's what I mean when I say the supply is being sucked up. The big institutional dollars who are building long-term positions are gobbling up the supply. They're shrinking that float. That's what allows the stock to make big runs. It's at the same amount of demand, the same buying is chasing a smaller pool of supply. And so that's the whole premise on these breakouts. I want to see the price action shallowing and tightening. I want to see volatility contracting. I want to see the pullbacks getting smaller. It's like a coiled spring getting ready to release its energy. So yeah, ADPT looks great in here. It looks great. If I bought it, I'd probably put a stop beneath this swing low, risk about 9%. If you want to go even tighter, you can just use an ADR and risk, 5%. Because if it breaks out, it should just go, not look back. Outlook, we covered this one as well, but Outlook, as I said in the beginning, I would cash out of Outlook if it were me. This is a stock we bought over here on a high tight flag breakout. Based on a second look with the FDA, it went up 130% in 3 weeks. Okay? If your stock is up 130% in a couple of weeks, you better sell some. I sold all of it in here. But the FDA approval I've been waiting for finally came on Friday. It was a wild Friday. And now we're getting a buy the rumor, sell the news situation. We no longer have a catalyst going forward. Listen, there's something everybody needs to understand about the stock market, okay? It is a discounting mechanism. Here's what I mean by that. Stocks move in anticipation of what is going to happen in the future. So it's really, really important to understand. It is not that, oh, the earnings are out, great, and now it moves. This move, nothing was happening over here. Nothing changed in outlook between June 10th and June 23rd, but the stock doubled. Why? Because all of us and all other investors were pricing in the potential that the FDA was going to approve this. And listen, the guys on Wall Street get better information than you. They have friends at the FDA. They pay people off whether they say they do or not. They have more information. And so as that becomes more and more and more likely, the stock rises in anticipation of that approval. The good news gets priced in. That's why I always say, listen, if you get up 30, 50, 100%, sell some. You don't have to wait until the event happens. Why do you buy a stock? Why do you buy a stock? Because you want to sell it at a higher price. If you get your higher price, sell it. Don't say, I'm going to wait to the news. I'm going to try to get the tippy top print. That's a fool's game. If the stock did this into the announcement and then popped today, you go, Ross, you're a genius. You were right. It just happened 2 weeks early. Take it. Take it. And so when I say buy the rumor, sell the news, that's a saying on Wall Street, and that stocks rise in anticipation of the news, on the rumor. When it comes out, it's confirmed, it's already happened. Sell it. Sell the news, right? So, this happened on Friday. It shot down, shot up to $1.70. It priced it all in, settled around $1.40. It's kind of fizzling out today. Maybe the thing's a $2 or $3 stock in a couple of months. I don't know. But when you get the move, you need to capitalize on it. And it's just like the people who are sitting around going, I don't want to buy stocks yet. I'm going to wait till the Iran situation's fully settled. I'm going to wait till inflation's down back at 2%. I'm going to wait until you're going to miss it. It's going to happen in anticipation of that. If you wait to buy a house until interest rates are 3% again, which they probably never will be, what do you think is going to happen to housing prices by then? They're already going to be way up, right? It's just how the market works. And so I get comments all the time when I post a video. Oh, Ross, he's exit liquidity. No, I'm not. Like, I don't care if we move it, if the market, I don't care what happens. I just know this. I am never going to let a 30, 50+% gain turn into a loss, ever, unless it happens overnight and I can't help it. So if you see me buying a stock in a video at $1 and it goes to 2, know that I sold some, if not all of it. Okay. And I encourage every one of you to do the same thing. How about the shipping stocks? Yes. Yes, the shipping ETF is ripping higher. We had a little dip in here, came right back. Um, Listen, this thing with the shipping is not going away anytime soon. Right now, it was Iran and the Strait of Hormuz. Now we're hearing that the Houthis are closing whatever the other strait is, cutting off Saudi Arabia. These shipping companies are getting higher and higher rates. They're going to be taking longer and longer routes. Europe is buying their oil from South America, from the US, shipping it all the way around the Horn of Africa instead of going to that little strait because they don't trust it. They can't get their stuff. The strait's open, it's closed, it's open, it's closed. Now they're shutting down another pathway. Like, it's not worth it. They're not sending their tankers through a war zone with inbred war fighters holding RPGs on the banks. They're just not going to do it. They'd rather pay another $1 a barrel and ship it around Africa. These stocks are going to benefit from that, right? Hewlett Packard. Oh, pretty, pretty. Beautiful action in Hewlett Packard. Yes. And this stock has been a dog forever. This stock has gone nowhere for what? A decade. Look at this. Between $10 and $20 for a decade, and then it just goes parabolic. Something has changed. It's in demand for the first time in 10 years. And a stock that goes from 20 to 60 needs to consolidate, right? This move needs to be absorbed. You don't want to chase these. I mean, if you got in here, you still made money in here, et cetera. But like, the high probability point is after the consolidation. So it comes in and rips down and starts to tighten up and consolidate this is really, really pretty. Breakout through 50 is your buy. Your stop loss at 45. You're risking 10% to see if this thing continues. Maybe it doesn't. Maybe we're the last ones of the party. Maybe it doesn't break out at all. But this is what institutional consolidation looks like. This is a $60 billion company. You, me, and our friends aren't going to move the price of the stock. What you're seeing is genuine institutional accumulation in Hewlett Packard. Okay? So I would buy this on a breakout above, what's that high there? 50.30. Go ahead and set this trade up. And buy it on a breakout above here. Okay? Just do like, I don't know, 300 shares. My stop loss, unless it breaks down, see my mouse is hovering, would be this little swing low here. We'll trade it. We can probably do it pretty tight at about $47. And I know you guys want excitement in the stock is going to move the next 5 minutes, but we don't always get that. This is about a game of patience. Okay. And so what we have now is a buy stop order on Hewlett Packard at $50.35. A buy stop says if it hits $50.35, I want you to buy it. Don't ask me, don't call me, don't text me, just buy it immediately. If that order is filled, if I get my 50.35 buy, I want to sell stop in at 47. So that's my risk, a whopping 6.5% on a stock that doubled in May, right? With a decent ADR for a big company, moves on average 5% a day, which means a good up day, 5-6%. You get a couple of those, you can see 10-15% movement this week on a 6% risk. Very, very clean setup here on Hewlett Packard. QBTS. Everybody knows what's going on. Whoa! Why is this the first? This stage stocks, did it get delisted and come back? Why is there no other data on QBTS? I mean, the ETF's not crushing. Let's look at some of these quantum stocks, see what's happening here. We can find a day trade in them. Guys, you're just joining. Make sure while we get a second to get signed up for that Black Ops service. It is just $5 for the whole year. Ask anybody in here if they've got $5 worth of value out of it. I promise they'll say yes. If not, my offer stands. Tell me, I'll send you your $5 back. But $5 for the whole year. Right now, we're doing these sessions on YouTube. We may have to go back and start doing them on Zoom again. So make sure you are members. You get access. The Thursday sessions, my analysts, are for members only. They're over Zoom. There's no public link. You'll get access to this industry strength indicator for life to put on your TradingView charts. You'll get my weekly newsletter every Friday evening. You get some bonus reports and access to my team and a ton of other stuff on there. So again, tradewithross.com is the link. You can also just click the one in the description, get signed up for that. Okay. All right. QUBT up 10%. Yes, but is that a stock you'd buy? No chance in hell I'm buying that thing in a massive downtrend. Rigetti. Yeah, they are catching a bid today, but these are nastily downtrending stocks, right? So if you're like, look, I believe in quantum. I want quantum. IonQ's a killer. I just give me a place to buy. All right, well, buy it here and put a stop at the low of the day. Because if this is the start of something, it's not going to go back below 34. Now, this is not a high probability trade. It's a stock in a downtrend, not in a leading group. It's down 50% since June. This is one we were hoping it did over here. It ended up kind of breaking out a little bit later. But these are violent in both directions, right? They can make huge moves up and huge moves down. So, settle in. I mean, this thing moves 17% a day. It went from 12 to 46 and then all the way back down, right? So these are the definition of speculative stocks. None of them have any profits. Most of them are very, very much story stocks. Applied materials, want to build a position? Yeah, pull back to the 50. This could be a decent place to add in for a swing in AMAT. RadNet, absolutely not. I mean, all these are in nasty downtrends. Now, we've made good money on the quantum stocks in the past, but let me show you where we bought those, okay? And I just want you to see what a good trade in the, because look, they're very high momentum. They're great stocks to trade if you can time them right. This is where we bought QUBT in our alpha stock service, right over here. So see how it had that big downtrend like they're in right now, okay? But then it consolidated. Then we finally got the buyers in control. They started to accumulate shares. It tightened up. It shallowed. There was clear resistance around the $10 mark, right? Then it gaps. This is where you buy, right there. And it doubled pretty quickly. Like I was saying earlier, you get up 50 or 100%, you sell some. I'd be selling some in here. Goodness. I'd be selling some of these extended days, right? I'd be out of it when it closed below the 20 or at least below the 50. But these are your good buy points after a consolidation. Not saying this is not the low, right? Today could be the low of QUBT. It could go from 8 to 18. Absolutely possible. But I try to put the odds in my favor. And that means stocks either consolidating that have gone through that, or stocks are in uptrends breaking out. Toast, TOST. Yeah, it's trying, right? Toast is the payment processor. If you go to a restaurant and they hand you a little tablet, it's going to be a Toast tablet. These were this was an extremely strong group in 24. This is what I talk. This is why I don't buy IPOs. See, this is what IPOs typically do. They price it at infinity. Everyone knows it's not worth that. It gets absolutely murdered. Then it comes down. In this case, over a 2-year period, consolidated. There's where it finally breaks out. And so now, yeah, got a little deep in here, but it's starting to come up and tighten against the 200-day. So this could be a good breakout for sure. Now, payment processing is not currently a leading group, but it would be one that's worth a stab if it sets up properly. UR Energy, yeah, this thing trending nasty as well. I mean, this is one of those groups. So there's two things you got to look at, right? One is the story, the fundamentals. The story on this one's fantastic. They have a rare license to enrich uranium, I believe, in the US. We're pushing toward nuclear. Yes. Do I think it's going to be worth massively more in 5 or 10 years? I do. Absolutely. Short term, is it setting up in a breakout? I mean, not right now. It's still very much choppy, right? It's just all over the place. Nobody knows how to price this thing because when you look at the earnings and sales, they don't have any earnings. Their sales are minimal. Like it's early. It's an early stock. People are buying and selling based on what they think the future is going to do. That's how a company with no profits is worth $500 million. That's just how the game works. But it's still very much consolidating and chopping around in here. So there are some little short-term buy points in here. Maybe, I mean, maybe you could have caught this little move off the lows, but it's right now. It's not really respecting key moving averages. It's not in an uptrend. It's just the price action's not yet confirming. The best ones when I tend to go heaviest are when everything is lining up. Why is cybersecurity trending higher right now? Well, last week we had an AI model break out of its cage. OpenAI's new model, they put in what's called a sandbox, which is a little dedicated environment. And this is how they test these cybersecurity weaknesses. They say, all right, try to find your way out. And they build this little game. It's like, okay, every way you find out, we'll give you points, et cetera. So the little AI competes. And it got out, found a way to connect to the internet, hacked another company, did all this stuff on its own. That's scaring the you know what out of people. And so all these big companies that have customer social security numbers and credit cards and proprietary data and all the stuff are going, man, these things can hack by themselves. We need to protect ourselves. And so they're all calling these cybersecurity companies going, help us, please. What can you do? Palo Alto's one of the biggest ones. That's what's causing the run. And if we look at their earnings and sales, okay, they have good earnings and sales, but did their sales double last quarter? Are they up 90%? No, nothing is happening. The estimates for August are a little bit higher, but they're moving in anticipation of this new trend, of the potential sales coming in. And so that's why if you wait until the earnings are there, the numbers are solid, like the move's already happened. It just priced in several phenomenal quarters. Um, okay. What CrowdStrike doing? Yeah, not really moving much. What happens on a pullback? Not exciting. Iron Energy, yeah, it had a fantastic breakout over here. Another good one over in here. Then it just went absolutely parabolic, 20 to 80. And it's just been, you know, flippy city ever since, just all over the place. Maybe it's a great buy here. Maybe it's cheap. I don't know. Technically speaking, though, there's no clean trend. And just think about what you're looking at, okay? The stock's down 50% the last 2 months. And think about the law of supply and demand. We want stocks that are in demand, where the hedge funds and the endowments and the ETFs and the mutual funds and the pensions and investment banks are buying, right? If you were consistently buying millions of shares in IREN to build a big position, what are you going to do when it falls 10%? You're going to buy more. 15%, even more. 20, I'm throwing the boat at it, right? It shouldn't fall 50%. So a stock that falls 50% is clearly not in as much demand as we thought, right? And so that's why you don't normally see this in good trending stocks. That's why they tend to hold their moving averages in these uptrends. This was consistent demand. This is not. And it may be a great long term hold. It may be dirt cheap based on the fundamentals. I have no idea. What I do know is the stock is not currently in demand. And I live by the law of if they want it, I want it. If they don't, I don't. They're the ones that move prices. They're buying drive stuff. If they're selling, it's going to go down. ZBio, yeah, great uptrend. Mate, I mean, it's just about, what's it up, 50, 70% the last couple of months? Last couple of weeks, excuse me. It's ripping higher. And it got through its consolidation, right? You had all these people trapped. It gets to there, it stalls for a week as they got out. It then pushed higher. So this was your short-term buy point. This is the move out of consolidation, right? It looks good. If I owned it, I'd hold it. CRISPR, I mean, not with my money. I don't want it. What about this as it's going higher? Does anything on this chart say it's about to go higher? It doesn't to me, right? Think about what you've seen. The stock went from 64 to 47. Okay, so it fell 25%. If something you've been wanting to buy is 25% off suddenly, what are you going to do? You're going to buy it, right? I would. If you've been looking at a house, it's, $500,000 and they mark it down to 375, you're probably going to put it on for rent. But look what's happened here. It's down 25%. 1, 2, 3, 4, 5, 6, 7 days. Nobody's buying it. It's an egg. It's splatted. It's probably going lower, right? So until I see some demand, I'm just not interested in it. Thoughts on IBM? It looks terrible. Truly terrible. I think this was the move on Trump talking about the company. Again, nothing changed. It went up 50% in a week or two. They sold it back. It had a bad earnings day here, got hammered down. Nobody wants it, right? Had its worst day in years, fell 25% in a day. If this were a great stock and people thought it was going to do well and they wanted to own it, they'd buy it. They're not buying it. They don't want it. This was just hype. Oh, the president tweeted about it. Well, every other stock he tweeted about the last 18 months has skyrocketed. I'm going to buy it. It's not any more complicated than that. Think these guys in Wall Street are brilliant? No, they're not. Half of them are coked up on a desk just trading the news. Trust me, I know them. So it's just not something I'd be interested in buying. Now, Melly is beginning to set up, and this is fundamentally a phenomenal company. This is about to be the first company in the history of the world to grow their sales by 30% or more every single quarter for 30 quarters straight, or 30 months straight. What is it? 30 months. I forget. Anyway, you don't see this. Steady 30, 40, 49% sales growth every single quarter. Okay? That's why it went this high. It is now pulling back and to me appears to be consolidating. It's starting to come in. We're starting to tighten. Now look at what was support, right? See support, support, support is now resistance, resistance, resistance. Okay? There's your line in the sand. $1,900 a share. We come in, we shallow, we break out, you want to buy. That's the turn in Mercado Libre. It's going to be through the 200-day average. The 10, the 50 are going to be pointing upward. Probably a great buy point. In fact, I'm going to jot this down so I don't forget it later. Let's see. Procter Gamble, yeah, just sitting around there in stage one, not really doing much. MLKN, and it's right into supply. I'd be careful. Careful on that one. NAVN, Navin. Yeah, I think I looked at this one. Um, Cloud-based technology for travelers. So much about it. 6 billion. I mean, look, the trend is strong. It's up, 200 or 150% since April. 50-day moving average is holding. It's going to continue. I mean, we never know when the party's over, but this is a pretty good buy point considering. I'd put a stop loss beneath that low. It's $2 a share. Yeah, absolutely. Silicon Motion. I This one's starting to show signs of rolling over. And you're going to see a lot of these stocks roll over, okay? You don't double or triple in a couple of months and then just keep going unless you got a phenomenal company. And while we were seeing higher highs, higher lows, now we're seeing lower highs, lower lows. Probably going to break in here. So this is what's called a head and shoulders pattern where it forms what's looks like a head and shoulders. So you get a shoulder, a head, another shoulder. And it's a bearish pattern. And the trick is to sell short when it comes through there. So it could recover, but if it does this, it's probably over. And the thought being, okay, they're getting it up, and now it's higher, up, now it's breaking down, and you see it hammering on a support level at 240. And think of support and resistance levels like a brick wall. Okay, you could hit it with a hammer and it bounce off once, and you hit it again, and a chunk came off, and you hit it again and again, and if you hit that thing enough times, it's going to break, right? So if you get a stock just hammering against this, eventually it's going to break, and when it does, it's going to run. Same thing on the downside, right? Okay, let's see. What else do we have? AT&T extends D-Wave Quantum partnership after 240x speed boost. Well, that'll do it. Yeah, that's is it up today? Oh no, it didn't close yesterday. I don't know why there's no data. Must be some kind of data issue with this. This is not a brand new stock. The paper since the open, but something's happening there. ADGM, absolutely not. Looks truly terrible. LEDS, too whippy for me. Um, SEMO we looked at. Energy transfer. Yeah, I think it's trying. It's not on a great buy point to me. It's not, super tight and consolidating, but looks better than most. Elf Beauty wouldn't be my pick. Yes, it's got some steam behind it. Maybe a little breakout for consolidation, but you're really fighting a multi-month downtrend there. Webull. Yeah, it's actually a really clean chart on Webull. I'm not a big fan of the brokerage myself. It's one of the few I've tried and didn't like. Um, but you do have a pretty clean consolidation here. And now we're kind of breaking out, retest right there at the 200. So, yeah, it's actually a really good buy point. I'd put a stop at 685. Be risking about 10%. So, yeah, it actually looks really good. Not my favorite stock, but it has all the signs of a basing stage one getting ready to run higher. Yeah, good pick. VEEE, penny stock, obviously. Now look at the bottom right of my screen. See, this is market capitalization. That's the value of the whole company. It's a whopping $11 million. This is a penny stock among penny stocks. It is a tiny, tiny little guy. I don't know what happened to cause this massive move. It's moving 47% per day on average. Okay. So you either believe in this thing, you strap in, or you don't. I don't know anything about it, but it went from 6 to 60 and then all the way back down here to 10. It's a mover. Zero interest in this. And this is a good example. Like, okay, you got this big day, right? It goes up 45% in a day. And how does the market respond to that? It goes right back down. Nobody wants this. Nobody wants it. Whatever happened to pop it up, they just sold it right back off. So if you get a 45% up day, something big should have changed. A huge DoD contract, a medical breakthrough, a massive earnings beat, a piece of legislation, something big. And that should be the start of something. If they immediately sell it back, it was a pump and dump. It was some newsletter promoting the stock. It was some, kid with some bar mitzvah money going ham on the options market. It was something. It wasn't a move. That's repricing the stock. Ford Motor. I didn't know it made this big move. Yeah, I mean, not really my kind of stock. It's a kind of a slow, sleepy blue chip, but sure, you've got this big kind of cup with handle consolidation. It started to come out. Could be a good buy point from a technical standpoint. Sony, gap and run. It's like a lot of you guys just chasing what's moving today. I mean, doesn't look like much to me. There's some kind of news, but it's still just down there in its chop zone. Hims. This is a very volatile stock. Now, this was one of my favorites over in here. We bought this multiple times. If you want to see a clean breakout, look at Hims over here in 23. They just move over here, see them from big downtrend to coming in, nice clean consolidation, break, gap, run, like huge move. Nice structured pattern. This, if you're not familiar, is basically like an online pharmacy. It started out as a Hims, now it's Hims and Hers. It's for men, all the stuff you don't want to go to the doctor for. It's ED treatment and hair loss and skincare and that kind of stuff. And the weight loss drugs are what's caused it to be so volatile. They got these GLP-1s. They got sued by some of the big pharmaceutical companies and they partnered with one and that deal fell apart and it's just kind of all over the place. So that's why it's so volatile. Um, I don't know what happened on Friday. It fell 14%. Nobody's buying. So this would kind of worry me. If you really like this stock and just wanted to get it, I'd be really tight about it. Like, you think, okay, maybe this is a good, I'd risk like that because as volatile as this stock is, you want to get several shots at it if it's not going to work. Um, so I'd like low of day it, but nothing about this is it's going higher to me. It's down 35% in the last couple of weeks. I guess that's kind of par for the course with this stock, but it's it's not one I would buy. The new IQQ, it's going to be just like QQQ, I'm sure. It's just their version. No difference, just a NASDAQ. Target. Yeah, Target again trending higher. This was a go woke, go broke victim over in here. Started selling women's bathing or girls' bathing suits with holes for your male anatomy. And, I love my two daddies shirts and, didn't do very well. They got hammered, but it has turned around. Really nice clean up trend. As someone whose wife spends four figures a month there, I could support it. Sales teetered off, appear to be coming back somewhat. So kind of stabilized. Not huge, but trend is your friend. Navitas, absolutely not. Duolingo, I bet this is getting killed. Oh, okay. Yes, this is a software stock with like language and learning and learning other languages, and then agentic AI said I can build anything in 10 seconds while you're sleeping, and all these software stocks got hammered. So It's trying to kind of form off these lows and come back. It might. Wouldn't be my favorite, but if you're looking for a spot to buy, this is probably a pretty good one. Stop it, 113 or so. Soundhound, yeah. Again, we've traded the stock multiple times on big moves during the AI run, but it's there's no demand for this thing. It's just getting murdered. It's making new lows every week. Motorola, yeah, maybe. You can pretty clearly see your line in the sand here at around 425. See how it was, visible support here for a couple of months. Now it's been resistance. You're starting to see some tightening. Yeah, make a case for Motorola. It's not a big mover, you know. It's not a very exciting stock. But if you're looking for a buy point, this could be a good one to do so. Sure. We got to end here pretty soon, but if you haven't, make sure to get signed up for that Black Ops service. Again, it's just $5 for the whole year. I don't know why. For some reason, several months back, I got a strike on YouTube doing these live events. When that happened, we went back to doing over Zoom. They're only for Black Ops members. They're not public on YouTube. But if you are signed up, you are locking in an entire year of these sessions. And I think you'd be surprised what you can learn in a year. So just go to tradewithross.com. If you're laying in bed or something, scan that QR code at the bottom right corner. But make sure to get signed up for that before we finish up today. T-Mobile, definitely not. Rush Street Interactive. And this is a software company. Oh, casinos. Yeah. Yeah. Great trend. Kind of surprised, honestly. I thought Las Vegas was kind of dying. But look at how many good opportunities you had here. You see the consolidation, breakout, consolidation, breakout. This would have probably stopped me out, but then it consolidated again, broke out, multi-month consolidation again, breaks out. Like good trending stocks, the kind of names that go from $2 to $30 this is how they should behave. They should run and consolidate, which means buy the pullbacks at a 50 or buy the breakouts from consolidation. Yeah, good name. Planet Labs. Oh, Photronics, excuse me. No, wouldn't be interested in this. Big supply zone came right through it. Lower lows, lower highs. Doesn't look like it wants to go. Not saying something can't change. When I give you this, I'm not saying the stock's definitely going lower. I'm saying there's no signs technically that this is a good place to buy and it's likely to rise quickly. Okay, I'm not seeing any signs of accumulation. And that's from a technical standpoint, that's what I'm looking for. DFTX looks great. It's pretty quiet. Was it acquired or something? No? Okay. So some big gap news here, consolidation. It's priced in whatever's happened. So unless you get a break above 48, you're probably not going to see a whole lot. SoFi, I think it's early, but I think it's probably coming around. I like these fintech stocks. I think they're the future. I think the next generation, basically me and under, is going to be, using Robinhood like boomers use Wells Fargo. I think SoFi, I think that is the future. We are seeing clear signs of accumulation. I think it's a little bit early, but when this thing turns, I think it's going to be a big move, and you'll probably see a push right up here into 30. Right there to that last supply level. And SoFi tends to trade pretty well. It tends to come in and consolidate and bounce around, clean drifts higher, structural consolidations, solid moves. When it rolls over, it rolls over. And when it consolidates, it consolidates. So, see if it does this. If it does, yeah, buy it. If you wanted to begin building a position in SoFi, just like the stock, sure, not a bad place to do it. Picking up some shares in here, but be very cautious if it gets down under 15, because that means it could be rolling over. STXS, stereo taxes. Yeah, this is another one, a nasty downtrend. I mean, the story makes a lot of sense, but we don't know how much of it's priced in, and things change every day in this environment. So I tend to hold my convictions pretty weakly here. thought we probably had a good buy point of supply, but once it rolls over down, I mean, it's just uh uh, uh you know, there was our gap and they just sold it off. Gap to 185 and just eviscerated it. Ondas, yeah, I mean I just don't really see anything. Like what do you see in here? I see a big consolidation area and then it broke down below it. It did bounce off this little low from November, but now it's just holding there. You're below the 50, you're below the 200, they're trending lower. Like I don't see anything that makes me super optimistic about this. AGPU, Axe Compute, tiny little micro cap, $88 million. Just so you know, small cap stocks are 300 million to 2 billion. This is 80 million. So it's one quarter of the lower threshold of small caps. Very, very, very small. Institutions are not buying this. It's tiny. I see some consolidation. I see what you're looking at, but still very, very, very volatile. The smaller the stock, the less clean they tend to trade, the less likely they are to hold by these laws. Because what makes these patterns work and these structures form is those laws of supply and demand. It's the law of large numbers, right? And if you've got tens of thousands or even millions of investors building and buying and selling, and this law of supply and demand can work out. This stock only sees $4 million a day in total trading. The whole company's only worth 88 million bucks. Like institutions aren't doing they can't play in this sandbox. It's too small. So it's just retail investors. That's why they tend to get overextended and oversold and much, much more volatile. But if you're looking at this going, all right, well, I'm seeing it looks like a big stage one. Yeah, I agree. It does. I see what you're seeing. I don't tend to trade these because they're so whippy. And I mean, I could move this stock if I wanted to right now. I don't do that. I don't try to manipulate stock prices because then I can't get out of the thing. But it's just very, very thinly traded. Bosco, no. I mean, it's gone nowhere in 2.5 years. The ADR is tiny. I don't think there's much meat on that bone. Grocery outlet, yeah, maybe. It's trying to form a low here. Is it a high probability pick? Technically, probably not. Fortis, on the other hand, looks much better. We're seeing some consolidation here. It's come in and kind of cup with handled. If it breaks out, I need to see volume. I need to see a high volume day because it's chopped around here for way too long. Forta Biosciences is obviously a buyout. Notice it gapped up and didn't go anywhere. Watch this. Argent to acquire Fortex Biosciences $77 a share. It's over. Done. They're buying it out of 77 a share. It won't exist. INRG, iShares Global Energy Transition, the clean energy ETF, mutual fund. Okay. Maybe like this was clean over here. See the difference? Demand, consolidation, tightening, breakout. See the move? So you do have a retest, but it's been 2 weeks and it's not bouncing. So this is kind of do or die time for the clean energy sector. Owl, I think it's early, not doing much. Still in stage one. Could pop tomorrow, could pop 2028. I don't know, but you're just in a chop zone there. So I don't think you have a huge edge. Navitas, we talked about this. Not a chance in hell. I mean, just absolutely murdered. This one probably caught a bid with the semiconductor run in April and May. They realized, oh, wait, none of those sales are going to Navitas, and it went right back down. Nothing in demand is going to fall 68% at 53 days. Maybe this is the low. Maybe demand comes in. Maybe something changes. But right now, nobody wants the stock. AMC, yeah, it is a cult stock. you'd probably get better advice on a Reddit board and look at a chart. It's just very, very whippy. You know, you've got 130% runs, followed immediately by 50% drops. Like just too volatile for me. It's not setting up here. Tesla, nasty, nasty action in Tesla. Long term, probably a great buy, right? Long term, the last big consolidation was May, June, July of 25. Yeah, probably a decent place to buy. 230, 240, I'd go really heavy into it in a long term account. Does it look like it's going up next week? No, it does not. 15% of the day is nasty, especially for a $1 trillion company like Tesla. And then the next day it goes lower. And today it's holding at the lows as well. So far, there's no demand for it. Now, this is, if you're placing a long term bet on the humanoid robots, on Elon Musk, I think some of this sell off is from the attention shift, him putting much more energy into SpaceX, into that IPO, what's going on over there, the launches, the satellites, Starlink. This tends to happen when he shifts his focus elsewhere. Investors they know they're betting on Elon Musk. But I think long term, it's probably a great buy. It just is not a short term great buy here. Okay. All right, guys. It's been an hour and a half. We're going into session here. We could look at stocks all day, but markets opened up strong, giving it back pretty quickly. Maybe some news going on. Maybe the pause with the situation in Iran is reversing. We got to wait. I'll look into the news and see. But stick to my advice with this, which is just focus on the leading groups. And one of the easiest ways to find out what those are is to put this industry strength indicator on your chart and just see which names pop up over and over and over again. That's where the money is flowing. That's what is leading the market. And that's where, all things being equal, you want to be focused, right? You want your money in the group stocks that are going up. The trend is your friend. Momentum is where you want to be. What's Newton's first law? An object in motion tends to stay in motion. Stock going up tends to keep going up and vice versa. So stick with where the momentum is in the market. Focus there, and I think you'll see much better success. If you're not already a member, make sure to go to tradewithross.com to get signed up. $5 whole year, weekly sessions for a year. Another one on Thursday, my newsletter, indicators, bonus report. You can even call my support team if you have questions. I've even got my chart layouts in there. You can download to set your trading view up. So tons of stuff to get you started, help get you on the right path. And I promise the best $5 you'll spend today. Otherwise, I'll see you all next week. Thanks, everybody.